Hey everyone, and welcome back to our final video dealing with Bravo Company. Thank goodness. We're going to be doing the closing entries and we will also be doing the post-closing trial balance. So in order to begin that, hopefully you see what you see in front of you is what you have on your paper. This is what we've been doing from pretty much chapter 2 all the way through with adjustments and stuff as well. So let's get into it. In order to do the first part of our closings, we know that we need to have an income summary account. So I'm just going to go ahead and create an income summary T-table just to have that ready. And so we're going to specifically look at our red accounts or the temporary accounts. I call them red accounts, again, just a mnemonic device that helps me keep everything straight. But those are the revenues, the expenses, and the dividends. Now we have 2 revenues, we have 4 expenses, and we have 1 dividend. And I tend to do them in that order because, it just keeps me organized. I don't want to miss something. So let's start with the revenues. Revenues, we have consulting revenue, and we have a credit balance of $174,000. So to get rid of that balance, remember we want to make it 0. To get rid of that balance, we need to debit the account for the same amount. So I'm just going to go ahead and add 174,000 to the debit side. That cancels those numbers out. So our consulting revenue is 0. And if I'm going to debit the consulting revenue account, I have to credit something else. And so therefore I'm going to credit income summary for the same amount. So credit 174. Now that takes care of the T-tables. Now I need to put it in terms of journal entry. So again, I'm just going to put 1231 because this is my closing. That's when closings happen. Consulting revenue of 174 and then income summary credit of 174. All right, that takes care of one of them. Now let's do the interest revenue. We have a credit balance of 600. So to get rid of it, I have to debit that account for 600. So I'm going to go ahead and put debit 600. And if I debit interest revenue, then I have to credit something else. Again, it's going to be income summary. So I'm going to credit 600 for income summary. Again, I'm going to put that into a journal entry, 1231, interest revenue, 600, income summary, 600. That takes care of my revenues. Now I can move on to my expenses. First one I'm going to do is my salaries expense. I have a debit balance, of 26,000. So to get rid of that, I need to credit the same amount, 26,000. And if I credit salaries expense, that means I have to debit the other account, which is income summary. So I will debit income summary for that same amount. Now, in the interest of time, I'm just going to put this up here real quick. 1231, income summary, 26,000, salaries expense, 26,000. Now let's go to the next one. Again, in the interest of time, I'm just going to put these up here. It's not going to be typed out or anything like that. But we have rent expense. So it's 18,000 on the credit side, 18,000 income summary on the debit side, and our journal entry will look like that. We also have supplies expense, so 1,550 on the credit for supplies expense, 1,550 on the debit side of income summary. Journal entry looks like that. And then finally, we have miscellaneous expense. So we have a debit balance of 44,000. So I will credit 44,000 and then debit income summary for the same 44,000. Journal entry looks like that. Okay, that takes care of our revenues and our expenses. So that pretty much takes care of our income summary. Now that we have done the income summary T-table, we need to close it out now. And so we've got to find its account balance. If I add up the debits and the credits, subtract the 2, it's going to give me a balance on the credit side of 85,050, which is our net income as well. Now that I have that, I need to close out income summary. So in order to close out income summary, if I have a credit balance of 85,050, then I need to debit income summary for the same amount, so 85,050. And if I debit income summary, then I need to credit another account, which this time we're going to credit retained earnings for that 85,050. And so our journal entry will be debit income summary for 85,050, credit retained earnings for 85,050. The last thing we have to do is we're going to do dividends. We got to get rid of that one. So if we have a debit balance of 5,000, we're going to credit dividends for 5,000. And if we credit dividends, then we need to debit the other account, which again is going to be retained earnings. So debit 5,000, and our journal entry would be debit retained earnings for 5,000 and credit dividends for 5,000. That takes care of my closings. Now we need to take all this information and put it into our post-closing trial balance. But before we do that, we need to find our account balance for retained earnings. And so if we add up our debits and our credits there, subtract the two, that's going to give us a credit balance of $90,450. If we look back at our statement of retained earnings that we've already done, you will see that the ending retained earnings that we found on our statement of retained earnings is the same as the ending balance that we have on our T-table. So we know we're good there. Again, another little check figure. So now let's get into our post-closing trial balance. So now we're only looking at the balances that, or the accounts that we have balances in. So again, all of our assets, all of our liabilities, and what's left of our equity. So cash still remains at $28,500. Accounts receivable still remains at $24,000. Interest receivable still remains at $600. Again, in the interest of time, because we've already done all these, I'm just going to go ahead and put what's left up here: supplies, prepaid rent, land, AP, unearned revenue, salaries payable, common stock, and retained earnings. That's all we have left. And I'm going to add up all the debits. That's going to give me $159,450. And credits, we hope, is going to be the same, and it is, so we know we're good. That is the end of the accounting cycle. We've done every part that we've needed to do, and so hopefully that made a little bit of sense. The more you do this, the more practice you have, the better it's going to become naturally. The more you're going to understand it, the more you're going to come up with your own strategy to complete these things. But hopefully this made sense. Hopefully you enjoyed it. And y'all take care.